Hello everyone. A very good evening to all of you. So today we'll be discussing about the basics of accounting. This is the chapter 1, okay? First, we are starting with commerce and accountancy. In that we are dealing with the basics of accounting for today. The most important chapter for making your base, right? So definitely I will advise you guys to please be very attentive, be participative, always attend, try to attend the live classes for the best results, right? So in this particular chapter, we'll be learning from scratch about each and everything, about each and every terminology of accounting, right? And in the meanwhile, if you face any difficulty, definitely do let me know. I'll try to even simplify it more for you, right? Okay, guys. So whenever we talk about accounting, here we do have the syllabus of entire commerce and accounting. Okay, so this particular lecture is dedicated to the basics of accounting, and whenever we talk about accounting, I personally think that Mr. Warren Buffett has a great role to play in, because he is the one who has told us about, who has expressed us about the importance of accounting, right? So Mr. Warren Buffett, he is Mr. Warren Buffett, the great legendary investor, Mr. Warren Buffett. He has many a times stated the importance of accounting, right? And do you guys know he's the owner of which company? He's the CEO of which company? Berkshire Hathaway. Okay, Berkshire Hathaway is the name of the company. And have a look at the stock price of Berkshire Hathaway Class A share. 7,35,920, and that is dollars. This is stated in US dollars. If you convert it into INR, if you convert this into INR, you'll be getting 6 crore 34 lakh 86,000 something something. That's the price of one share. That's the price of one share of Berkshire Hathaway, right? That's amazing, right? It's the world's most expensive share as of now, Berkshire Hathaway Class A, right? That's the name of the company. And Mr. Warren Buffett has many a times told that accounting is the language of the business. What is accounting? It's nothing but the language of the business. Why? Because whenever we are talking about business, we can see it in the news channels as well, in the newspapers as well, that FMCG EBIT is up by 12.5%. Now, what is EBIT? Reliance Q4 net profit is 19,000 crore, revenue is 2 crore, 2 lakh crore, EBITDA margin is 18%. Now there are so many technical jargons here, right? These all are the accounting terminologies, and we need to learn it if we need to learn how the business works, right? If we want to understand how the business works, we need to learn the language of the business, which is none other than accounting. Imagine yourself in a foreign country and you don't know the local language. It's tough to understand, right? It's tough to communicate, and that's what happens in the business. So as SEBI grade A officers, as you will be formulating the regulations, the rules and regulations of the capital market, right, for the best interest of investors, you need to learn how the business works. And before learning how the business works, you need to know the language of the business, which is none other than accounting, right? So that's why accounting is very important, and I personally feel that this is one of the most important and the most interesting subject that you need to know. If you are a business minded person, if you want to work in finance, if you want to work in any area of commerce, or maybe you want to run your own business, this one thing will definitely give you that financial IQ that will help you ace the examination, as well as to be successful in the real life as well. So here, these are the four pillars of accounting, right? These are the four pillars of accounting. इन्हीं के ऊपर accounting का पूरा base टिका हुआ है, right? Asset, liability, revenue and expense. Asset, liability, revenue and expense. So can you guys tell me, what do you mean by assets? What do you think is the meaning of the term assets? Any idea about that? Anyone? Can you define assets in one or two words or maybe one line? The term asset means valuable resource. Okay, valuable resource. If I tell you in a very simple word, so I've taken a quote from Rich Dad and Poor Dad. An asset is something that puts money in my pocket. An asset is something that puts money in my pocket. So definitely an asset will help me generate more and more money, right? That's an asset. Anything which helps me generate more and more money is my asset. If I talk about a liability, it's just the opposite of asset. Liability is something that takes money out of my pocket, right? So if I talk about liability, that will result in any kind of outflow of my money from my pocket to somebody else's pocket, right? So asset is something that takes that puts money in my pocket, and liability is something that takes money out of my pocket. That's the simplest meaning that I have personally seen in accounting. However, formally we can say that assets are valuable resource. What is an asset? It's a valuable resource. If I talk about liabilities, then that the liabilities are nothing but obligations. Obligations. What do you mean by valuable resource? That means in the future it will definitely give me benefits, right? I'll be gaining future economic benefits. It's a valuable resource, plus I'll be receiving future economic benefits. That's my asset. If you talk about liability, those are my obligations, right? Let's suppose I have taken a loan of 1 lakh from a friend. Now that's my obligation, I need to settle it, right? Acha, asset is having so good vibe, right? Something that puts money in my pocket. However, liability is having a kind of negative vibe, that I need to pay money, right, to somebody. So that's what asset and liability is all about. If I talk about revenue, have you guys ever heard about the term revenue? Or maybe we can also call it sales. Also call it sales. It's nothing but the amount that we generate by selling the goods and services. Amount generated by selling the goods or services. Let's suppose I'm a doctor. So whatever amount I will be able to generate, whatever amount I'm able to generate by rendering services, right? I'm selling a service, I'm rendering a service here. That is a revenue for me. In the business, we also call it as sales. So it's the amount that I have generated by selling goods and services. Now, whatever I have generated is not my profit. That is my revenue. That is my revenue. What is my profit? Revenue minus expenses is my profit. Revenue minus the expenses will be my profit, right? That is my profit. What are expenses? Day to day expense or outflows that I need to incur in order to earn my revenue, right? Let's suppose I'm a doctor. So now I want to do an operation. So I need that stretcher. I need some people, some professionals around. I need my tools, right? In order to do the surgery. So I need to incur certain expense. I need to pay my staff salaries. So in order to earn the revenue, I need to incur a lot of expenses, right? Because revenue can't be earned without doing any kind of expense. So revenue minus expense, revenue minus expense will be my profit, right? So I can say that asset and liabilities are the balance sheet terms These are related to balance sheet, and these two are related to profit and loss account. Sir, what is balance sheet? What is profit and loss account? We'll slowly learn each and everything. Okay, we'll slowly learn each and everything. Have some patience. Definitely, we'll be having discussion around the balance sheet and P&L as well. Okay. So assets are my valuable resource. Liabilities are my obligations that I need to deliver, that I need to settle. Revenue is nothing but, I can say, gross inflow here, gross inflow of money, right? As of now, we can say that. Expense. Now, in order to earn the revenue, I need to incur a lot of expenses, right? बहुत सारे खर्चे करने पड़ेंगे. And profit is nothing but revenue minus expenses. Okay, so that's the four basic pillars of accounting. These are the four basic pillars of accounting that you need to first know. Okay, right? Clear till now? Any doubts? You can definitely ask me. If you do have any doubt, please ask me now, right now. Any issue till now? No? All set? So look, let's just quickly have a look at what are the assets and what are the liabilities, some of the assets and liabilities. So if I talk about asset, land, a plot of land is an asset. This is an asset. Why? Because the land value always appreciates. The land value always appreciates. So definitely I'll be gaining something or the other as capital gain from this land. Or even I can rent it out, or even I can sell it at a higher price in the near future, right? Even I can do business on it, I can do agriculture on it. There are a lot of uses of land, right? So because of that, we say that land is my asset. What is land? It is my asset, right? If I talk about building, let's suppose my office is there in this particular building, then that's a asset for me. Why? Because it will be giving me future economic benefit. I'm doing business from this office. I'm a chartered accountant by qualification, so I have my CEO office in this particular building. People come to my office and take my advice. So that's why I'm able to offer my advice because I have this building. So that's a workspace for me, right? That's a asset for me because it's bringing me future economic benefits. That's my valuable resource again. Or maybe plant and machinery. Let's suppose I have this JCB, a machinery. In my business, I'm using this, right, for construction purpose. That's a fixed asset. That's an asset. Then again, I do have plant and machinery, right? All these things help me generate money. All these things help me generate money. So that's why I call them valuable resource, which helps me generate future economic benefit. And that's what asset is all about. So these are all the assets. However, I can say that they are fixed assets, or we can also call them as non-current assets, right? Or we can also call them as property, plant and equipment, which is the new name. Okay, as per the accounting standards, earlier we used to call it as fixed assets, then non-current assets. Now we call it as property, plant and equipment, right? So these are the names. The concept is the same. Asset which helps us generate future economic benefit for more than 1 year is a fixed asset or a non-current asset or a property, plant and equipment. These things will help me generate income for multiple years, right? Let's suppose I bought a JCB or a plant and machinery. It will help me generate money for more and more years, right? The benefit won't be consumed within 1 year. However, I can use it for multiple years. Now this land, this is a generational wealth, right? So these all are my fixed assets, non-current assets, or we can also call them as property, plant and equipment. Similarly, there are some other assets as well. Let's suppose I'm the owner of a departmental store. Okay, I am a store owner. So I usually sell these general store items. Okay, so that's stock for me. We call it stock, we call it inventory, we call it goods as well, right? That's my stock. The bottle of jams, the packet of juices, packet of biscuits, right? These are stock in trade for me. I'm dealing into it. Whatever thing I'm dealing in is my stock. Let's suppose I'm a pen manufacturer. I manufacture this pen. I sell this pen. This pen will be goods for me. This pen will be stock for me. This pen will be inventory for me, right? So that's again my asset. Why? Because the moment I start selling my inventory or stock, I'll be gaining money, right? However, this is a current stock. This is a current asset. Sir, why it is not a non-current asset? Look, non-current asset is a one that gives me future economic benefit for multiple years, for more than 1 year. This particular inventory, I expect to sell it within the year itself, right? Let's suppose a Reliance Mart. This is Reliance Mart, let's suppose. So will Reliance Mart expect that they will be selling this stock in more than 1 year? No, right? Obviously, they will be expecting it to sell all the stock in a matter of months or maybe within 1 year. So that's why we call it as current stock, right? It is currently there. However, in the long run, it won't be there. It will turn, right? This stock will get sold. I'll buy new stock, right? That's why we call it as current asset. Now, these all are my examples of current asset. Cash in hand. I have 2 lakh rupees in my pocket. That's an asset, right? I can use it for my benefit. That's a cash in hand. It's also a current asset. Okay, it's also a current asset. My bank balance. Let's suppose I do have an account in HDFC Bank. Whatever balance I'm having, that's an asset. I can use that balance for the benefit, right? For n number of benefits. That's again a current asset, right? So what is current assets? You'll be able to realize it within 1 year. The benefit of which you will be able to realize within 1 year, that's current asset. The benefit of which you are able to realize in more than 1 year, then that's a non-current asset, right? Like land and building and plant and machinery that we just discussed. So that's all about asset. If I talk about liability, then liabilities are my obligations, right? So just like we are having two types of assets, non-current asset and current asset, in the same manner, we are having two kind of liability as well. Non-current liability and current liability. Non-current liabilities are those liabilities that I need to settle, I need to pay them off in more than 1 year. Let's suppose I have taken a loan. Let's suppose I have taken a loan of 5 years. So I need to pay in the next 5 years. So definitely it's a long-term loan. It's a long-term liability. We call it as non-current liability. We call it as non-current liability. If I talk about bonds, again, a non-current liability because these are long-term nature bonds. Usually government issues bonds, right? Private companies also do issue bonds. Let's suppose I haven't paid my electricity bill. Bill payable. I haven't incurred my electricity bill yet. So can I say that that's my liability? Why? Because that's an obligation. I need to settle it, right? I need to settle it. That will also be a liability, right? That will also be a liability. So these are some of the examples of liability, right? However, this electricity bill payment is nothing but my current liability because I need to pay it immediately, most probably in the very next month as well. Otherwise, they will cut my connection, right? They will disconnect it. So that's a current liability. I need to settle it within 1 year. I need to settle this obligation within 1 year. However, if I talk about loans, if I talk about bonds, these are the non-current liabilities that I need to settle in the coming years, at least after a year, right? So we have seen the bifurcation of asset, current asset, non-current asset. We have seen the bifurcation of liabilities as well, non-current liabilities, current liabilities, right? Now here is a format of a balance sheet. Okay, this is a T-shaped format of balance sheet. This is what balance sheet is all about. What is a balance sheet? It is nothing but balance is key sheet. Whatever balance is there in my business, whatever balances remain in there my business, in my business, let's suppose I do have a plant and machinery. The worth of that plant and machinery is 1 lakh rupee. That's a balance. Building, I do have a building as well. That's a balance. I have cash of 15,000 in my bank account, cash at bank 15,000. That's a bank balance. It will come under balance sheet. So those accounts of which any balance is there in my business, definitely it will appear on the balance sheet, right? Broadly, it shows my financial position. What it shows, my financial position. I'll tell you everything. Each and everything will be learning in detail. So this I can see on the right hand side there are a lot of assets. Now assets can be of two types. We have learned non-current asset and current asset. Liabilities also are of two types, non-current liabilities and current liabilities, right? Now here is an exercise for you. I'm giving you 1 minute. You need to bifurcate the assets between non-current and current, and you need to also bifurcate the liabilities between non-current liabilities and current liabilities. Do let me know in the comment section quickly. First, tell me what are the non-current assets and what are the current assets, right? Let's begin with the assets first. So tell me the non-current assets from here on the right hand side of the balance sheet and the current assets. Bifurcate it quickly. What's your opinion, everyone, on the assets? Okay, let me just segregate it for you. Okay, do let me know whether you have segregated the right way or not. So if I talk about asset side, plant and machinery is a non-current asset. Land is a non-current asset. Definitely it will generate future economic benefit for me for more than 1 year. Building, again a non-current asset. Stock, debtors, cash in hand, cash at bank, these are current assets. Why? Because I expect my stock that it will be out of my shop, it will be sold within 1 year. What is debtors? Can anyone tell me what do you mean by debtors? Debtors is nothing but These are the people to whom I have sold goods on credit. Let's suppose I sold goods worth rupees 1 lakh to Mr. Mohan, right? Now Mr. Mohan will be my debtors. That's an asset for me, right? He's an asset for me. Why? Because I'll be receiving my money in the near future. So definitely, if I have sold anything in business terms, obviously it will be 30-day credit period, 60-day credit period, or maybe 3 months, 90 days credit period, right? Usually within 1 year only. That's a part and parcel of business, right? Whenever we are doing business, we sell on credit as well. उधार पे पैसा दी, उधार पे गुड्स बेच दिए, right? So that's debtor. All these items are my current assets here: stock, debtors, cash in hand, cash at bank. If I talk about plant and machinery, land and building, that's my non-current asset, right? So that's the bifurcation of asset. If I talk about liability, bank overdraft, trade creditors, these are my current liabilities. Sir, what do you mean by creditor? Creditor is just the opposite of debtor, right? Let's suppose I am a t-shirt manufacturer. I am a t-shirt manufacturer. So in order to manufacture this t-shirt, I need to buy cloth. I bought the cloth from Mr. A. I bought the cloth on credit. I haven't paid him yet. I will be paying him in the near future, right? I'll be paying him in the near future. So I can say that Mr. A is my creditor. Mr. A will be my creditor here. I'm yet to pay him the money, and I'll be paying him the money within 1 year, right? That's why he's a current liability. So creditors and bank overdraft are my current liability. Bank overdraft, you must have already heard. All the businessmen do have the OD account, overdraft account, CC limit with the banks, right? That they will be paying the money in the near future. They have borrowed the money from bank for XYZ purpose. It's a short term kind of funding as of now that I have taken from the bank, right? I need to repay it back quickly. So that's nothing but the bank OD. That's nothing but the bank overdraft, right? Then we do have other terminologies as well, like long-term loan from bank, debentures, general reserves, preference share, equity shares. These all are my non-current liability. These all are my non-current liability, right? They all are my non-current liability. We'll be having a good amount of discussion regarding these terms in the coming few classes gradually. Okay, let's learn everything gradually so that you guys also won't be feeling that kind of pressure. If you are reading these things for the first time, it's fine, right? Things will get into your brain slowly. Whenever we are doing anything for the first time, it's always difficult, right? However, after a few classes, you'll be getting that comfort level. So that's a balance sheet. Okay, that's a balance sheet, and it always matches. The asset side will always be equal to the right hand side will always be equal to the left hand side. That's for sure. That's always true. If it's not matching, then definitely the accountant has made some mistake. The accountant has made some mistake, right? Now, why it matches? Because it's based on the accounting equation. This is the accounting equation. Asset is equal to liability plus capital. Now, what do you mean by capital? Capital means amount invested by the proprietor, amount invested by the owner of the business. Let's suppose I'm the owner of my business. I have invested. If I want to start a business, I need to invest something now, right? I need to invest money. I have invested 10 lakh rupees. So that's a capital. It's a capital, right? So the accounting equation is assets, the total of all the assets is equal to liabilities. These are my liabilities, outside liabilities, plus capital. These three things form part of my capital here. Okay. We'll be gradually learning what is equity share capital, what is preference share capital, what do you mean by general reserves, and so on. Right? Give me some time, I'll explain you each and everything. First, let's build a base. Okay, first let's build a basic base, and then we'll be moving gradually to the rest of the terminologies. So asset will be equal to liability plus capital. Liability and capital always appear on the left hand side of the balance sheet, here in the t-shaped balance sheet, right? So that's my accounting equation. If it's not matching, then definitely there is a problem, right? Definitely there is a problem. I must have made any kind of error while drafting my books of accounts, my balance sheet, right? Now let's do a quick exercise. On the screen, you can see some of the words. They'll be coming. As of now, you can see one word, debtor. You need to tell me in the comment section whether this is a asset or a liability, right? So that's a basic exercise that we'll be playing. First, let's play accounting, and then we'll be moving ahead with the rest of the topics, right? So what is a debtor? Is it an asset or a liability? What do you think, guys? What do you mean by debtors? Is it an asset or a liability? Definitely it's a asset, right? That's a asset. Next is land. Land is an asset or liability? Land is an asset or a liability? That's a asset. What about building? That's also a asset, right? That's also an asset. What about bank overdraft? Is it an asset or a liability? Bank overdraft is a liability. What about bank loan? Now you need to tell me that it's a asset or a liability, plus what kind of asset or liability is. Is it long term? Sorry, is it non current asset? Is it non current liability, or current liability, or a current asset? Right. So tell me that as well. Bank loan. Let's suppose long term bank loan. Long term bank loan is a non current liability, right? What about capital? Is it an asset or a liability? Now that's interesting. That's interesting. Capital, is it an asset or a liability? Capital is a liability for the business. That's a liability. And that too, non current liability. That's why we can see that in the balance sheet side, capital is appearing on the liability side, right? Now that's your homework. I'll be teaching you definitely why capital is a liability. It's the amount invested by the owner of the business. So ideally it should be asset. That's a regular confusion. That's a very common confusion students do have. that sir capital तो मैंने invest करी है, that's the amount I have invested in my business, then why you are telling it's a liability, why it's an obligation? I'll be definitely telling you in the next class, right? So that's your homework for today. Do research about why capital is a liability and not an asset, right? Next is your trade creditor. Again, it's a current liability. Then we do have cash at bank. It's a current asset, and cash at bank is also a current asset. Okay. Okay, guys. Then we do have a difference between preference shares and equity shares. So can you guys tell me what is the basic difference between preference shares and equity shares? Any idea about that? What is the basic difference between preference shares and equity shares? And do you guys have ever heard about these terms? Anyone? No? Okay. Let me tell you quickly. Equity share capital is the owner's capital. Okay. Equity shareholders are the real owners of the business. So when I talk about equity share capital, they are the owners. However, preference shares are the shareholders, but they are not having any kind of ownership. By ownership, what do I mean? They have voting rights. What do you mean by voting rights? Let's suppose I want to take a crucial decision in my business. Then I need to take approval. I need to do the voting of the equity shareholders. Voting of preference shareholders is not required because it doesn't concern them anyway, right? I need to do the voting of all the owners of the company what they want, right? So that's a ownership capital. In both ways, we are raising money, right? We have taken money from both. To preference shareholders, we have issued preference share capital. To equity shareholders, we have issued equity share capital. If you are investing as a equity shareholder, definitely there is a high risk involved. And because of the high risk, there is a possibility of high returns as well. If you are the owner of the business, then definitely you are the owner of all the risk as well as all the returns, right? You are the sole owner of the risk as well as the return if you have taken ownership of the company. However, in preference shares, there is a limited risk and limited return as well. Now, that's a very basic concept of finance, I will say. Whenever there is a high risk, the investor will ask for more and more return, definitely. He's taking a high amount of risk, he'll be asking for a premium, right? And whenever there is a low risk, the return will also go down. तो रिस्क लेने का ज्यादा रिटर्न मिलता है. दैट्स द बेसिक कॉन्सेप्ट ऑफ फाइनेंस, राइट? Now, why do they are having a limited return here? Because they have fixed amount of dividend. They will be receiving a fixed percentage of dividend every year. However, in equity, there is a variable dividend. What do you mean by dividend? Let's suppose my company has earned a profit of 1 crore. So I'll distribute it, right, in both of my shareholders. Preference shareholders are having fixed dividend. That means their percentage is fixed. However, because equity shareholders are the owners of my company, right? They are my owners of my company. Then how can they be having a fixed dividend? They have taken an unlimited risk, so they will be taking unlimited profits as well, right? So variable dividend, whatever is remained after incurring all the expenses and paying the preference shareholders will be belonging to the equity shareholders, right? Will belong to the equity shareholders only, right? So these are the broad differences between preference and equity. And if I talk about, let's suppose the company goes bankrupt, then in that case preference shareholders will be having a preference in receiving the money. Now, what happens when a company goes bankrupt? Definitely, we'll be selling all the assets of the company and we'll be distributing to all the creditors, preference shareholders, and equity shareholders. So, preference shareholders will be getting a priority over equity shareholders. First, I need to pay the preference shareholders of my company, and then कुछ बच जाता है, if anything is still left, I will be paying the equity shareholders. Why? Because they are the owners of the company. If I'm having good profits, they'll be enjoying good profits. However, if I suffer loss, they need to bear the loss as well. If I suffer bankruptcy, they need to bear the bankruptcy as well. Their money will be definitely gone, right? They will lose their money in case if I face bankruptcy and if the assets are not adequate enough to settle the liabilities, right? So these are the basic difference between equity and preference. We can here see from the balance sheet that on the liability side we are having equity share capital and preference share capital. Now you can see a percentage which is attached with the preference share capital, and that is what dividend is all about. This is a fixed dividend, 13%. This is a fixed dividend. That means the capital is of 1 lakh rupees. Every year they will be getting 13% out of it. That means 13,000 rupees of fixed dividend. Even if I earn 1 lakh rupee, I need to pay them 13,000. Even if I pay 1 crore, I need to pay them only the 13,000 only. Even if I earn 1,000 crore, the dividend will always be fixed if it is related to the preference share capital, right? If it's related to preference share capital, the dividend will always be fixed. That's for sure. However, you cannot see any kind of, and you will not ever see any kind of fixed interest rate attached to equity. Why? Because they are the owners of the business. They do have all the right, they do have all the ownership, they will be sharing all the risk. So, definitely, no fixed percentages attached here, right? No fixed percentages attached here. That's your equity share capital. Then there's a lot of confusion. I have seen most of the students who are not having the commerce background, they are quite confused in the word debt and debtor. Are you guys also having the confusion between debt and debtor? Most of the students feel like debtor is also kind of debt because there is a debt in the terminology itself. Because there is a word debt in the debtors, debtors is also debt. Is it true? Or are they completely different? What do you feel, guys? What do you think? Are they both different or the same only? They are way apart, right? There's a lot of difference in debt and debtors. Okay, first thing is debtors are assets, however debt is a liability, right? When I say I am in debt, that means I have taken some loan, I need to repay it, that means that's a liability for me, that's debt. Debtor is completely different, it's a asset for me, it will be definitely, I'll be receiving future economic benefit from it. What do you mean by debtor? Look, I have manufactured t-shirts, that's the name of my company, Pratik Limited. I am a t-shirt manufacturer, right? Now I have sold some t-shirts to Rahul. Now Rahul has promised me to pay after 3 months. The t-shirts that I sold to Rahul were worth 1 lakh. The value was 1 lakh rupees. The sales amount was 1 lakh rupee. Rahul promised me to pay after 3 months. Rahul is my debtor. Rahul is my debtor here. He is a asset for me. Why? Because he'll be bringing future economic benefits. After 3 months, I'll be realizing my 1 lakh rupees. So he's my debtor. That's why we call it as asset, right? So they are ways apart. Debtor you can always see on the asset side. That means these are the people to whom I have sold goods and credit. These are the people to whom I have sold goods on credit. That means I am yet to receive the money. उधार पे बेचा है, उधार पे माल बेचा है. I'll be realizing my money soon. Right? You can see the debtors on the asset side. However, if I talk about debt, that's a liability. What is debt? Debentures, bank loan. These all are debt. Usually, when I say debt, that means it's a kind of long term loan, right? It's a kind of long term loan. So don't get confused by the terminologies. Debt is completely different from debtors. Next is depreciation. Can anyone tell me what do you mean by depreciation? Any idea about depreciation? Anyone? What do you guys mean by depreciation? Any idea? Look, let's suppose if I bought a brand new laptop. I have bought a brand new laptop. This is worth 1 lakh rupees. I bought it for 1 lakh rupees. right? It's 2025 as of now. The year is 2025, right? So I bought it today. After a year, we will be in a year 2026, we'll be in 2026. Do you guys think that the value will still be 1 lakh? What will be the value? 1 lakh? More than 1 lakh? Or less than 1 lakh? Of the same laptop, I do have a laptop. I purchased it right now, today itself, in the morning, of 1 lakh rupee. The same laptop, after 1 year, what will be its worth? If I sell it, what will be its worth? Will I get 1 lakh rupees, or I'll be getting more than 1 lakh, or I'll be getting less than 1 lakh? Definitely less than 1 lakh. Definitely I'll be getting less than 1 lakh. Why? Because of depreciation. Because of depreciation, fall in the value of fixed assets. What do we call depreciation? Fall in the value of fixed assets or non-current assets, right? Laptop is a non-current asset. It will give me future economic benefit for more than 1 year. However, the value of laptop will always go down as soon as and when the time passes, right? In 2027, now let's suppose it was worth 1 lakh rupee in 2025, it was worth 80,000 in 2026. In 2027, it's worth 60,000. Then again, after 1 year, it's 40,000 maybe, and so on. There will be a time that there will be a time then this asset is worth zero, right, or close to zero. That's nothing but depreciation. Why? Because the value of the fixed asset will fall over the period of time due to normal wear and tear, due to technological changes. There will be new laptops that will be coming in 2026, 2027, AI powered laptop as well, right? So definitely the value of old laptops will go down with time because of the obsolescence, technological obsolescence, or maybe normal wear and tear. अरे लैपटॉप आज खरीद के 20 दिन बाद बेचूंगा तो भी कम में बिकेगा, राइट? बिकॉज इट्स अ सेकंड हैंड लैपटॉप नाउ. So that's what depreciation concept is all about, right? Fall in the value of asset. Fall in the value of asset. Let's suppose the laptop is worth 1 lakh and I estimate a useful life of 5 years. The cost is 1 lakh and I estimate that it will be lasting for 5 years. So can I say that 20,000 rupees per year is my depreciation? Right? I must have shown the laptop in my balance sheet. Every year it will go down by 20,000. So don't you feel that an intelligent person, a prudent person will charge an expense of 20,000 per year? Why? Because the value of laptop is going down by 20,000 every year. Right? It's depleting every day, it's depreciating every day. So that's why I need to charge this as an expense. This is an expense for me and this is a non-cash expense. Right? If I pay salary of 20,000 to an employee, I need to pay it in cash or via bank channels, right? There will be an outflow of cash. However, there is no outflow of money when I charge depreciation. Why? Because the value is down by 20,000. There's no actual cash inflow that I need to do, right? There's no actual cash inflow that I need to do. That's what depreciation is all about, right? Now, can you guys tell me an asset, a non-current asset on which no depreciation will be applicable? The value of one fixed asset that will never go down, that will always go up. And the answer here is land, right? Plot of land. On land, no depreciation will ever apply. So land is the only possible example as of now, the value of which never depreciates, rather it appreciates, it goes up, right? Plot of land. And I'm not talking about building, I'm talking about land, because building depreciates, right? So that's nothing but the concept of depreciation. It's a non-cash expense. Okay, it's a non-cash expense, right? So I hope you are able to understand this particular concept of depreciation, though definitely will be understanding this concept in much detailed manner, right? When we are talking about your accounting standard 10 property, plant and equipment, which is there in your course, we'll be definitely talking about depreciation in a much detailed manner. Okay. Okay, guys, that's all from my end. I'll conclude here itself, right? Please do revise, try to revise each and everything on the very same day itself, right? That's the best way to build a base, is to keep on revising it again and again, right? So I request you to please revise it again and again and only come to tomorrow's class when you are done with the revision of this, right? So thank you so much, guys. Bye bye. Take care. And in case of any issue, definitely you can always ping me. Okay, you can let me know. I'll be more than happy to help you on that. Right? Bye bye. Take care.